The demand for food globally has been increasing on the back of a growing global population. There are some impressive statistics from Food and Agriculture Organization on that trend. Each day, 200,000 babies are born globally. This is roughly 70 million more people each year that the agriculture sector is required to feed. Despite a slowing population growth rate, the UN projects the global population to grow from 7.5 billion to about 8 billion by 2023 and 9.7 billion by 2050. The growth of global population is largely driven by developing countries. In 2050, the sixth largest countries by population are expected to be China, India, Indonesia, Nigeria, Pakistan, and the US. According to the estimates by the Food and Agriculture Organization of the UN, by 2050, global agricultural output will need to increase by 70% in order to meet projected demand arising from population growth, biofuel usage, and improved diets. We as investors look at sectors such as agriculture and water rights to access this megatrend. In fact, we already have quite a significant exposure to this sector in our investment portfolio. Apart from strong tailwinds, this asset class offers low to negative correlation to other more traditional asset classes. It does have very asset class specific risks, and skill is required to make the right investment decision that deliver the returns. The agriculture sector in Australia at Farmgate contributes approximately 3% to the country's total GDP. And this sector has a lot of potential for further investments and innovation. We have exposure within our portfolio to agricultural investments across various crops and geographies. And there are various strategies available when investing in agriculture. For example, cash lease, when an investor is buying farmland and then leases it back to an operator or to a farmer. Crop share, a similar model, only where part of the lease there is a crop share arrangement. Private equity type strategies, when an investor is an owner and operator of an asset. And we also have exposure to the largest well-diversified portfolio of water rights in Australia, which supports many farmers. The concept of investing in water is around acquiring the perpetual water entitlements and selling or leasing the annual water allocations to end users of water or irrigators in order to generate income. Water entitlements on issue in Australia are capped, which means they're limited to the current volume. In other words, more water entitlements cannot be issued in their specific geographies, and they are limited by the sustainability of each water resource. Water entitlements are a perpetual title to receive an annual share of water allocated from a specific and defined water resource, which is governed by water sharing plan. The actual flow of water available each year is a function of each state's water management and climatic conditions over time. Water sharing plans set out at stages during each water year, commencing 1st of July, and the allocation volume that will be made available to the water entitlements for each year, so-called water zone, depending on seasonal conditions and water availability. The water volume allocated to water entitlement holders is readily tradable within regional markets. In contrast to agricultural investments, investments in water entitlements are valued monthly. On a mark-to-market basis, they offer liquidity as the underlying assets are divisible, scarce, and regularly traded. They can be diversified across geographies, they don't depreciate or require ongoing replacement capex. Investment returns comprise annual yields and capital growth. yields are generated by investing in a portfolio of water entitlements. And a well-managed portfolio of water entitlements can deliver approximately 10% per annum return, including gross yield of 4 to 6% and a long-term capital growth of approximately 5%. This asset class has low and, in some cases, negative correlation to other asset classes, and it can be seen as a strong diversifier for any investment portfolio. The increasing demand for food is a major macroeconomic and societal shift with very strong tailwinds. It is a very long-term theme, and it can be played across asset classes within alternatives. I'm really excited about the opportunities within WAM alternative assets investment portfolio.